Welcome to RealCast, the weekly roundup of the real asset markets. My name's Richard Betts and I'm joined by James Wallace, Nicole Dines and Paul Strome. Let's start with you, James. What have you been following this week?
Yeah, the Times last week reported that Brookfield increased its stake in British Land, having first taken out a 7.3% stake in about May. It's just adding some further speculation that there might be an impending future takeover. Brookfield increased its holding to 9.2% according to regulatory filing last year. And this acquisition of this equity stake comes after Brookfield's chief executive, Bruce Flatt, met his senior team in London this month, which is prompting rumours that he's eyeing private equity deals for British companies. As we know, British Land reported just a couple of weeks ago a £1.2 billion portfolio devaluation. It's now down to about 11 billion, and its market capitalisation is now just over 3 billion, which has actually almost halved over the course of this year. The second story that I was looking at this week was actually also in the UK around the government's moratorium on evicting commercial tenants from commercial properties. They've now extended that to the end of the year to protect certain businesses that have been hammered by the coronavirus. Under the extended ban that was originally imposed back in March and had been due to expire later this month, landlords can't kick out tenants even if they don't pay rent. So this decision, of course, is contentious. For some consumer-facing companies across retail, entertainment and leisure, it provides a commercial lifeline for companies. But critics say it can also kick the can down the road and it redirects the strain onto landlords. The BPF CEO, Melanie Leach, described the decision as hugely disappointing. And she argues that many well-capitalised businesses have exploited the blanket moratorium, refusing to pay rent despite being able to afford to.
It was really interesting, actually, at Realx, talking to both the panels from the US market, but also the Asian market, and just explaining some of the things that were in place in the UK and in Europe versus what was happening in Asia and the US. So it was really interesting to get that perspective. And I just want to say thank you also to all the exhibitors, the 70 speakers, and the over 1,000 attendees who were at the Back to Business launch event at Realx. Nicole, you were following some of the events there as well, and the news this week. So what did you pick up?
And a few very interesting panels, and there seemed to be quite a lot of consensus on the main trends. On the capital flows, there was some data from Simon Mallinson from RCA, who was saying that Europe has performed far better than either Asia or the US, where investment volumes have dropped by some 40% in the first half of the year, but Europe has remained remarkably resilient. But digging a bit deeper, the numbers have been skewed by a few large deals. For example, Blackstone's £4.7 billion acquisitions of IQ student accommodation in the UK. So there have been a few big deals, mainly prompted by US capital. And then while the little deals, the smaller deals below 50 million have halved. And Jason Oram of Europa Capital was pointing out how dangerous that is, and if it continues, because the European market thrives on being varied, so it can't just rely on a few big deals, but it needs the sort of the very many smaller deals to have to retain the depth and the interest from investors. So that's Europe, and within Europe, obviously a very different picture, with Germany being the standout market, showing that it's very resilient. But in fact, second quarter numbers in Germany were higher this year than they were last year. And part of the reason is the strength of the domestic market. That's been a recurring theme, where in the markets where with a strong domestic capital base have performed much better. The other reason is obviously Germany is seen as a safe haven and a haven of stability, but also is seen as having reacted very well to the COVID-19 crisis. And that's a theme that, again, was carried through. Natalie Breen of PwC was saying that over the next few months, investors will really make decisions and start rethinking about joining the market and making investments, but they will really look at what governments are doing and how they're coping with the COVID-19 crisis. And there was a very interesting report from CMS, the law firm. This year it was focused on the effect on COVID-19 on the market, and there seemed to be optimism. The majority of players think that the market will bounce back, that there is a strong future for real estate, but it will be different, and they call it an ESG-led reset of the market. So a lot more focus on ESG themes, on sustainability, on health. Obviously, there's a big question mark about offices, although most people seem to believe the offices will come back in some way. They were, in fact, that even the floor plates will not change, but it will actually, the space within the offices will change. But it will be the same amount of space, but it will just be divided up differently. And obviously, the other thing that comes out from this survey is that the sectors that have done well and will continue to do well, all healthcare-related sectors and logistics, as we know.
Yeah, and that's interesting. That picks up a number of the themes that were coming through very strongly, I think, at Realx in terms of a number of the panels, particularly that ESG side, but also human capital, health, impact investing were all themes that kind of came through. Paul, what did you pick up this week?
At that the Human Capital, ESG and Winning Cities session at Realx, the consensus was that institutions and larger firms have realised and embraced ESG, although smaller firms and smaller tenants are still sort of fairly focused on rents and yields. But one of the Lars Schnidrig of Core State Capital, the CEO, gave an indication of some of the practicalities involved. And, obviously nothing's done overnight. And he was saying that for his company, the ESG monitoring process started 2 years ago with environmental reporting, mainly driven by clients who want to know how much CO2 their buildings emit. But he said that it'll take another 1 or 2 years before the information on the S and G, the social and governance elements of ESG are available. And he said that many investors are asking for ESG reports, but a lot of companies don't have the IT systems to comply with that. And that was something echoed by Christiane Conrads of PwC, who said there's been rapid development and acceptance of the need for transparency, but she stressed that you need to look at the life cycle of a building. But there tends to be a dearth of data because it's not handed on every time a building changes hands, and so people are reinventing the wheel. So she suggested that there should be some kind of land registry of building data. In news stories, last week we were reminded more than once that the goalposts for ESG and everything else are moving courtesy of coronavirus. And research firm Capital Economics have undertaken a survey which looks at the outlook for housing, but actually is also an interesting pointer for the future of offices. And the firm believes that just over 20% of office workers will still be working from home in the US in 2022, with a further 30% doing so at least 1 day a week. The report says that prior to coronavirus, the effects of extended home working were not really well understood by most businesses. But it says that in the last 6 months have been a largely successful live experiment in home working, and that the barriers to a more remote workforce have been broken down. And Eurostat data show that in the UK, 4.7% of employed persons reported that home is their main place of work in 2019, and in Europe the figure was 5.3%. By June this year, the figure ranged from around 60% in UK, Belgium, Spain, France, and the Netherlands, and 40% in Germany. Obviously, that's substantially temporary, but the firm expects that an element of that will be permanent.
There was a very good presentation from Sean Cooley actually around transformation, and I think that's a topic we'll maybe come back to next week. But in the meantime, thanks, James, Paul and Nicole. Thank you for joining us, and look forward to seeing you next week for our roundup of the key themes in real assets. Thank you.